Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis. This video is about currency trading education part 8. This is the last video in a series of videos that we titled currency trading education. I hope you have watched the video the part 1 to 7. If you didn't, please do so before watching part 8. Okay, let's get started with currency trading education part 8. We are looking at the Euro USD. In this video, we will discuss wealth transfer. We will discuss currency trading. We will discuss currency transfer, wealth transfer. What usually takes place, ladies and gentlemen? Suppose you are a millionaire or you are a billionaire. You are a wealthy person. And you live in the Eurozone, all right? So, because you live in the Eurozone, you have your assets in the Euro. Your money in the Euro, your house is valued in the Euro, okay, your car is valued in the Euro, most of your asset is valued in Euro. So if the value of the Euro is going down, it means that your wealth is being cut, all right? The same thing if the inflation is going too high, that's also devaluing your wealth. So these are rich, okay, people or billionaire or wealthy people employ what we call the wealth managers. The wealth managers are market participants and they are participating in the currency market and they watch the leading currency pair, especially the Euro USD and also the dollar yen. And these smart wealth managers will be moving or controlling or managing, okay, the wealth of their clients because they get commission, they get fee by managing excellently, all right, the asset of their client. So if they increase the value of their client, of the asset of their client, they get commission. So if they manage very well the portfolio of their client, if they manage very well the wealth of their client, they will make more money. So these wealth managers or money managers will make excellent decisions for their client by monitoring carefully the central bank decision, which we have discussed in the video 7, and they will monitor the currency pair. So suppose you are here and you are a very smart wealth manager, and you notice that the Euro USD will display high and display lower high. You understand what is the technical trading, you understand what is the area whale, you understand what is the market pattern. At this point in time, most wealth managers will be advising their client to take their money out of the euro and to put into the dollar, because at this point in time the dollar is likely to go up and the euro going down. Therefore, the Euro USD will go down. As the Euro USD is going down, the wealth manager will move or will convert the wealth of their client into the dollar, and they will move their wealth out of the Eurozone into the dollar, and by protecting their clients assets, because they don't want the value or the wealth of their client being erased by the devaluation of the euro, because the euro is being devalued, going down in this session here for 3 consecutive quarters. They will quickly, because they will earn commission if they manage carefully the wealth of their client, they will move the money out of the euro into the dollar. Prior reaches another key level, the same wealth managers quickly will move the money out of the dollar into the euro again, and converts the wealth of their client into the euro again, because they know that the euro is likely to go up again. They will check the policy of the central bank, of the ECB. They will check the global economy environment, and because the price at a cycle point or a very important zone like this, they use very often this quarterly chart. That's why I'm showing you the quarterly chart, and they will convert again the good, and you see the price reach the same level, and they will do the same thing they have done before right here, moving wealth out of the euro into the dollar again, and the euro is going down during that time. As the euro is about to go up, they will push the money back again into the euro, and this exercise can go on for some time. The forex market is a very dynamic market, and a lot of ordinary traders do not understand what is taking place, because when we are talking about euro, we are talking about the dollar, we are talking about any other dollar, we are talking about real money, real wealth, real asset being managed. Most of the houses are valued in dollar, the cars are valued in the currency, the lands, okay, the properties of people are valued in currency. So if the currency is about to go down, wealth managers have the duty to protect the client's property by transferring or converting, okay, the money, okay, the wealth of their client from one currency to the other currency. This is taking place all the time. This is not about technical trading, it's not about swing trading, this is just about wealth management, and this is also taking place in the market. If you notice, these are huge money that is about to move, as we have seen recently for the USD yen, as the Japanese are quickly ordering their wealth managers to convert their asset into dollar, and this is what's happening here. The dollar yen start going up because people are moving their asset out of the yen into the dollar, and it's running up big time. All right, this is just people are afraid that their wealth will be devaluing. You have billions, you have assets in the yen because you remember when the central bank in United States was devaluing, printing the dollar, the Americans were moving their wealth, converting their wealth into the yen to protect their wealth. Now they notice that the Japanese stated clearly that they're going to devalue big time the yen. Again, they have to take their wealth quickly out of the Japan before they lose value again. They have made some profit during that time if they transfer it at the right time. Now they will do exactly the same thing. Some, okay, wealthy people are making money just with the market fluctuation. Another market participant that I need to mention to you, apart from this rich billionaire, rich multi-millionaire that are protecting their wealth through what we call wealth managers, there is another group of market participants that are what we call the speculators. I'll bring back again the Euro USD currency pair. In fact, nothing can stop you to do exactly the same thing like these people and buy the money, real money, and keep it and hold it until the music has changed. What do I mean by that? I will explain it to you here. So suppose you were here and you watch this, you see you hold it down, or maybe you missed this one, now you see that the pattern is in place, you were here, and you were thinking in your mind that, okay, the Eurozone, the economy is about to improve, or you follow the policy of ECB because Mr. Trichet was here instead of Mr. Trichet was the president of ECB that time, and he was busy increasing the interest rate and propelling the euro to the upside. The Germans were happy that the euro goes up during that time because they think it's good for them, and you understand what is taking place. You will also, if you were here, if you want to play like the speculators, you will buy the euro. So suppose I'm in London now, I have some money in pound, okay? In London during that time, the Bank of England was printing dollars, so was printing the pound, so the value of the pound was going down. So instead of keeping my money in the bank in pound, I may decide to have my money converted into euro, okay? So you can do the same thing like speculators. This is the second group, speculators. They are just moving money from one currency to the other. These are not asset management. These are not wealth manager. These are just speculators that are converting money from one currency to the other. So they notice if they are very smart, they are very highly sophisticated speculators. They will quickly buy. So they have, suppose you have 1,000 pound or 100,000 pound, 1 million pound spare that you don't need. Okay, so you can go just convert it at excellent exchange rate, so you don't want to convert it at any price. You want a good price the day where your currency went down big time, and then you just convert it to the currency that is about to go up. So one currency about to go down, you come out of it and join the currency that is about to go up. When that currency also reaches the peak, it's about to go down, you come out of it and you go to the next one that is about to go up again. So here you can see that the euro was going down. If you follow my cursor, so here what was happening, the euro was going up and the dollar was going down during this session. Here the euro was going down and the dollar was going up. So you will move your currency, you will convert. If you're a speculator, you convert the money from the euro into the dollar. Here we are again, speculators. At this point in time, we start converting again the dollar into the euro. But remember, right now, the current president of ECB is Mr. Draghi. Mr. Draghi, under the pressure of the German, due to competition between the Eurozone and Japan, I think the Europeans are willing to devalue a bit the euro. So, though the currency is due to go up, they may decide to force it back down. But it's not too bad place to, if you want to speculate. You can hold it for a few years, up to you. I mean, it's up to you. But this is just a speculation. Speculator will convert at this point in time. Okay. They will convert the dollar into the euro, expecting it to roll it back up again. This just so two type of activity in this currency market: the wealth managers and the speculators converting either money or the wealth of their client into another currency to increase the value of their client, or increase their own wealth, or increase the value of their saving by moving from one currency to another at excellent exchange rate. Okay, I hope you have enjoyed this series of video about currency trading education, and that you have learned a lot from it. To summarize everything to you, it's not all about technical, it's all about combining the technical and the fundamental. We want to understand the correlation between currency. If you are using a technical tool, we are looking for the setup, the signal and entry point, aligning the setup with the market pattern. There are only three market patterns: the rising channel, the declining channel, and the horizontal channel. The market is global. One must always pay attention to the global market before, okay, one must align, okay. If you are living in the United States, you want to invest, you must first watch the macroeconomic condition, and before you align in the United States economy together with that to make excellent decisions. We also talk about money management, money managers that are we are talking about. We also talk about the wealth managers that are managing wealth for their clients and moving okay, wealth from one currency to the other currency depending on the policy of the central bank. The higher time frames command the lower time frame. Day traders, swing traders must also pay attention to hedging activity in the Eurozone. We have also discussed the trading idea part 1, weekly chart, high, low, median line. The previous Friday, high, low, median line. This key level, one must watch it. Beginning of a new month, we must implement trading idea part 2 and use the high of last month, the median line of last month, and the low of last month, and also the high, the median line, and the low of the last week of last month. There are more to this. We can discuss, go on for all day about currency trading education. At the beginning of the new year, we use a different tool that we call the 6 critical price level. We use also the smart median line. These are the tools that we use at the beginning of a new year. All right. I hope you have learned a lot from this, but the key point I want before I close this video and to say to traders is that when we are talking about trading, it's not all about excitement. It's about risking money. So when you're about to enter a trade or buy or convert or whatever we are doing in this forex market, we must control the risk. We want to enter at a low risk point. We want to buy at below the fair value, at a discounted price. So we want to be very smart, be very defensive, and be also very selective. If you are a new trader, you need to go step by step. It's not in one day that you're going to start making miracles, so to speak. But you want to start learning, okay, the correlation between currency and paying attention at least to the economy news, combining the technical with the fundamental. Go to Google Finance, Yahoo Finance, adopting the mindset of professional traders. One can learn to day trade and swing trade in one day, but it will take more time to adopt the mindset of a professional traders. There are very, very smart, okay, market participants in the forex market. We are talking about the hedge funds. We are talking about the banks. We are talking about the investment banks, all right? We are talking about individual smart speculators. So ordinary traders, retail traders must catch up by upgrading their knowledge and their ability. Until the next time, enjoy yourself and be very happy. This is about a currency trading education, a series of videos. Speak to you soon. We are the TSTW 24 traders.